Welcome back to Balancing Acts. I'm your host, Linda Hamilton, a CPA and certified exit planning advisor. And I'm talking with Nellie Akalp, the CEO and founder of CorpNet.com, which is an entity that helps business owners with all the compliance things they have to take care of, entity filing and creation, BOI filings. And Nellie does a tremendous amount of speaking for the small business community. Nellie, we were just talking about S corporations and about qualifying. So how about you mentioned that a C Corp could become an S corporation. I call it a tax creature, right? It's not an entity. It's something created by the IRS for taxation only. But an LLC can also elect to become an S Corp. Why don't you tell us about what you see as the advantages for that and how to go about it?
Thank you, Linda. So as we were talking, the main question becomes, why does an LLC want to be taxed as an S Corp? Because a lot of times my clients will be like, well, wait a minute, an LLC is already a pass-through tax entity. It's already a flow-through entity. Why would I want to be taxed as an S Corp? That's a great question, and here's the answer for you. LLC members cannot be employees of the LLC, and the members of an LLC cannot take a paycheck out of that LLC. A lot of times an LLC, we tax, it's taxed as a hybrid between a corp and a sole proprietorship. That's how we kind of, characterize this entity. It has elements of a corporation, AKA that personal liability protection, asset protection, and it combines it with elements of a proprietorship or a partnership. So for that reason, by default, single member LLCs are taxed as a sole proprietorship. Similarly, if it's a 2 or more plus member LLC, it's taxed as a partnership. However, if it's taxed as a sole prop or a partnership, by default, members of an LLC cannot be employees of an LLC because AKA of that proprietorship element. So what happens is, because they have to take a draw out of that LLC, and they're only limited to taking a draw out of that LLC, they can't take a paycheck. So if they want to draw funds out of that LLC to pay for themselves, they have to take it as a draw. What happens is they're taxed as a self-employer. So they have to pay higher self-employment taxes. A way to get around this and save on taxes is oftentimes, if that LLC member gets taxed as an S corporation, if they qualify, then what they can do is take a paycheck out of that LLC, saving on those high self-employment taxes. Now, the question becomes, well, what if I don't qualify as an S Corp because I'm a foreigner? Because as you know, anyone can become a member of an LLC, even trusts, okay? So then what happens? They ask me, well, if you can't qualify as an S Corp to, register for payroll and take a paycheck out of that LLC, you can opt for having that LLC be taxed as a C corporation. Because if that LLC is taxed as an S Corp, if you qualify, and if you don't, you can get taxed as a C Corp, then those members, either by being an S Corp election or a C Corp election, can take a paycheck out of that LLC, pay themselves through payroll, and then lower those self-employment taxes, okay?
Right.
So my clients will come to me and say, okay, Nellie, where do I sign up? And I say, wait a minute, beware, okay? Because there are compliance requirements that you're gonna have to abide by if you make these elections.
Right. And I was going to say, so I've been a practicing CPA for more than 3 decades, and I like to have a conversation with my clients. And, even as an S corporation, there is an employer share of self-employment tax, right, of the employment tax. There are still 2 sides. The difference is that if you take distributions out in addition to your paycheck, those are not subject to self-employment tax with an LLC. But beware, one of the things I like to talk to them about is compliance. Okay, sometimes they're not very good at doing the payroll, or they didn't take enough taxes out of their paycheck, and they have this huge profit at the end of the year and no estimates paid. So I really like to make sure I understand the personality of my client, that they are going to be able to comply. Running payroll means will cost you money. You need a payroll company. Someone has to do that. Your books are going to be a little bit different than with an LLC or sole proprietor. So my point is that yes, these things can lower your tax, not always as much as you expect, but there will be other costs offsetting to it, and you have to make sure you really understand it, how to do it. And the biggest problem, I think, would be to be able to take distributions. You have to make sure you're paying yourself a reasonable salary. What is the definition of a reasonable salary? So let's talk about that for a moment.
So I'm really happy you brought this up, because this is where the IRS cracks down on these corporations and LLCs. The reasonable salary requirement requires that if that corporation or LLC is electing to be taxed as an S Corp for purposes of taxation, they must, as a shareholder of that corporation, pay themselves a reasonable salary, which means they have to pay themselves what a reasonable person doing, their duties in that company would get paid for in doing those services. Oftentimes, what happens is these corporate shareholders will pay themselves a very small salary and take the balance of it as a distribution. That will alert the IRS, and it causes red flags for that corporation or LLC. And the IRS is really, really cracking down on these corporations and LLCs that are taking, as a shareholder, are taking smaller paychecks on payroll and taking big distributions in the form of a distribution. So at the end of the day, the reasonable salary requirement, is basically take the salary that, let's say you're a CEO of a company and you're a shareholder of that company. You have to pay yourself a reasonable salary as to what is reasonable for a CEO getting paid in, managing that corporation or LLC. Similarly, let's say you're a controller and you're also a shareholder. What would a reasonable controller be paid in running that corporation? So reasonable salary requirement means take a look at Indeed.com, take a look at the, salary.com, and see what a reasonable person providing those services as part of a 5+ person corporation or a 10-man corporation or LLC would be paying themselves, because you're saving yourself a ton of headache in the long run.
And one thing you have to look at, and as in most small businesses, we wear a lot of hats. So, you may be wearing the CEO hat, you may be doing your own marketing. That's going to be paid less possibly. You may be doing your bookkeeping, and the bookkeeping is paid less. So you want to kind of slice and dice that to enable you to have a salary that's maybe a little lower and take a higher distribution. But if you have a $30,000 salary and a $60,000 distribution, you better make sure that not only is it reasonable, but you must document it. You must be able to prove, why was it reasonable? Yes, indeed. RC reports, which is one I use, but you want to make sure that your accountant is talking to you about that. I know that you have some great articles about reasonable compensation on your website, so I hope people will check that out. So thank you for sharing that. What would you say are the, what other compliance things does an S Corp have to think about at year end that maybe an LLC does not?
So this is the perfect time of year that we're having this conversation. Again, an S Corp is a tax designation. So at the end of the day, that entity is a corporation, which means as a corporation, you have a ton of compliance formalities. At the end of the year, that corporation needs to ensure, first and foremost, we talked about it earlier, but that BOI filing requirement has to be filed. If it's an existing corporation on or before, January 1st, 2025. As a corporation, you are required to draft annual meeting minutes and make sure those annual meeting minutes are drafted yearly and kept in a safe place at your principal place of business. You also, as a corporation, are required to file your annual report on a yearly basis. So as a corporation, depending on your state and your state's filing requirements, you must check and see when your annual report filing is due. Typically, annual reports are due at the anniversary of your corporation's filing date. But some states, it could be biennial, and some states may even require you to file an initial report and then an annual statement of information. So these are, filing requirements and deadlines that you must make sure you acclimate yourself with, and make sure you know when you're filing due dates and deadlines are, so you don't miss them, because chances are, if you do, you're running the risk of potentially losing that corporate veil and losing your corporate shield as a corporation, because the state may administratively dissolve that company if you're not in compliance with state filings and formalities. Additionally, at the end of the year specifically, if, for example, your corporation or LLC has changed its principal place of business, you're deciding that you want to make some changes to the members or shareholders, there are filings that are required to be filed. And we always recommend these filings to be done before year end, so that here comes the new year, you're ready to focus on, launching your business or growing that business. Last but not least, you may have to, have been considering, hey, you know what? A corporation is not doing it for me, as far as taxes. Maybe I need to convert, and maybe you want to convert from a C Corp to an LLC, or similarly, an LLC to a corporation. You may want to consider converting that business.
Exactly. Right.
Last but not least is closing that business.
And so we're going to take a commercial break and come back and talk more. You can find more information at corpnet.com, but we'll be right back with to continue our conversation.